Bear with me, guys. Sorry.
No worries.
I'm just seeing if it's actually streaming it to Facebook because I can't tell. Hi, everybody. Thanks for bearing with us. We're just setting things up still. So just be one moment. We're trying to get this out to Facebook as well. Okay. Siobhan, do you want to go ahead? Oh, you know what? Siobhan is muted.
Right. Good morning, everyone, and thank you all for coming to day 2 of the virtual 2020 Chester County Single Mothers Conference. I also want to thank you for joining us online, and thank you to our first presenter of the day, Ms. Rebecca Worthington from Benchmark Federal Credit Union. Benchmark Federal Credit Union is also the title sponsor of this year's conference, and we'd like to thank them for being so supportive of our program and for supporting our single mothers. We want to make you aware of the chat features in the Zoom. We will be accepting questions, so if you have a question for Rebecca, please type in the chat. We are also live streaming this on our Facebook page, which is facebook.com/singlemotherscc. If you have any questions, feel free to leave a comment there for us. To avoid distractions and protect our privacy and your privacy as well, we'd ask that the attendees joining us on Zoom not turn their cameras on. Thank you again for coming, and take it away, Rebecca.
Thank you, Siobhan. Welcome. I'm Rebecca Worthington, as Siobhan said, and I'm the Vice President of Marketing at Benchmark Federal Credit Union, the only financial institution to exclusively serve Chester County. And this year marks our 80th anniversary of serving our members and the community. As many of you probably already know, this is Benchmark's 5th consecutive year as the title sponsor of the Single Mothers Conference. And due to the unprecedented times, we're pleased to be able to bring you this year's conference virtually. So sit back, relax, and let's get started. Well, we would get started if the slideshow was advancing. Nick, any idea how to advance the slideshow? Ah, there we go. I figured this out. Sorry, guys.
You got
it. Sorry about that. So today we are going to be discussing 10 tips for decreasing monthly expenses. The first tip is cancel unneeded and unused subscriptions. What I mean, examples of those subscriptions would be gym memberships, magazines. It could be box subscriptions such as food-based, HelloFresh, maybe even clothing-based like Stitch Fix. It could be live streaming and cable TV. It could be music and audio services and mobile apps. So with regard to mobile apps, it's often a good idea. I know often we'll download apps to our phone and it says it's $1.99 for it. And we go ahead and we set it up to automatically be deducted from our bank account or from a card, and then we forget about it. And that app is now on our phone. Every once in a while, go through your phone, your cell phone, and see if there's any apps that you haven't used in a while. If so, it's always a great idea to delete and unsubscribe to those apps, and hopefully then you will start to see a savings in your bank account, because then you won't be being charged that $1.99 or $2.99 that you had originally agreed to. Okay. And the next tip is investigate cheaper cable alternatives. So what I want you to do is you take your current cable bill and you look at it and you see what your current plan includes. And is there any way to cut back? So maybe you're subscribing to premium channels or premium services right now. And consider whether or not your family's really using those or if you really need them. If not, then I want you to call your cable carrier and I want you to tell them that you no longer need those premium services and you would actually like to cut back. You will see a savings in your monthly bill then. While you have your cable carrier on the phone, actually ask them if they have any loyal member discounts. Often keep this in mind with cable companies, insurance companies, cell phone companies. They will often have loyal customer discounts available. They will never reach out to you to advertise those. They will wait for you to call in and kind of want to lower your bill or say that you're going to shop around before they will actually tell you about them. So often it's a great idea just to call up and see if there's any loyal customer deals. And then it's also a great idea to actually, so for cable alternatives, maybe you want to go an alternative route from the traditional cable. And that could be YouTube or Hulu Live, Hulu with live TV. Both of those usually run under $60 a month, and all you need is internet connection. And then there's also a long-term savings that you could do, and that would be to consider purchasing your own router modem combo, and then that way you could eliminate the monthly rental fee for that device from your cable company. So you would realize a savings long-term by eliminating that monthly rental fee. However, there will be a one-time upfront cost of purchasing the device. Okay. So then tip number 3, review your cell phone plan. Okay, this is a big one. I know we all heavily rely upon our cell phones. I'm no different. My mom often jokes with me and tells me that I will know where my cell phone is before I know where my 6-year-old son is, and she may not be too far off on that one. So I do understand how important our cell phones are to us. I use mine for everything from communicating to storing passwords, to staying organized, to keeping track of appointments, both personally and professionally. So I do know how important cell phones are. With that being said, it's always a good idea to periodically take your cell phone bill and look at what your plan includes. Are there any ways that you can cut back? Probably the biggest ways to cut back are on the minutes, the monthly minutes and data plan. So if you go back, like say 4 months on your plan and you notice that you're not using all your minutes or your data each month, it's probably a good idea to call your cell carrier and say, I would actually like to step down a level and I don't need as many minutes and data each month. And that will save you considerably. In addition, as I said with the cable, when you have your cell carrier on the phone, ask them if they have any loyal discounts right now, loyal member customer discounts. And if they do, say you want to take them up on it. But also remember, it's always a great idea to shop around cell carriers. So oftentimes cell carriers will be offering new customer deals. So definitely shop around. But one thing to keep in mind when you're shopping around and considering going to a new carrier is that oftentimes you're under contract with your current carrier. And if you're under contract, there could be a penalty that you have to pay for switching. So make sure you know what your current contract is and whether or not there'll be a penalty before you make the decision to switch to a new cell carrier. Great. And then on to tip number 4, save on groceries. So I know that one of the biggest expenses is groceries each week, especially if you're trying to feed a family of, like a large family. So with that being said, we have a couple of tips that we could give you on how to save on groceries. First is plan your meals ahead of shopping. So sit down and think about what you might want to make for the next week, 2 weeks, and then actually look in your pantry and see what ingredients you already have at your house. That will let you make a realistic grocery list on just the ingredients that you need. And then that way, when you go to the store, it'll help you from spending extra money. Buy for 1 or 2 weeks at a time instead of going to the grocery store daily. Oftentimes we like to say, okay, we decide on a Tuesday morning we're going to make meatloaf for dinner. And so we decide to go during our lunch break or on our way home to buy the ingredients to make that night's dinner. A lot of us do that. And if we could just go in and buy the ingredients needed to make that night's dinner, that would probably be okay. But it's been proven that you don't. You end up buying extra stuff every time each day that you go in. So if you were to add up your receipts from your daily shopping trips, they would actually be a lot more than if you planned ahead and then went shopping. So then shop store circulars for deals. There's one place that you can see all the local store circulars, and that's flip.com. That's flip with 2 P's. Or you can download the Flip app. And then once you're on Flip, you can actually just enter your zip code, and then you'll be able to shop groceries, and all of the store circulars will appear for the groceries that you're shopping. So then that way you'll be able to know where the deals are. Don't be store loyal. I know oftentimes we don't realize it, but we end up being loyal to different foods, brands, restaurants, stores. And if you want to realize the best savings on your groceries, you're not going to be able to be store loyal. Usually when we're being store loyal, it's out of convenience. The grocery store across the street from our work, the grocery store across the street from our son's soccer field, so we can do it while he's having his soccer practice. So I understand if convenience is more important to you than the savings, then continue to do that. But if you want to realize the savings, you're going to need not be store loyal. And that means 1 week it might be Acme that has the better deals. The next week it might be Giant that has the better deals. And we all have multiple grocery stores in our community. Or it might even mean that you have to go to Acme 1 week for the meat and Giant for the produce to get the best savings. So you'll just have to determine how much time you have, whether the convenience factor is more important. But if savings is more important, then don't be store loyal. Use technology to realize discounts and cash back. So we have a couple of sites for you, and they're free sites for grocery discounts and coupons. There's Ibotta, which offers digital coupons. There's Fetch Rewards, which you earn points that can be redeemed for various gift cards. There's Checkout 51, which is cash back on your favorite brands, groceries, and necessities. And then there's coupons.com. That is a great one because it gives you access to hundreds of digital coupons. And that's awesome because you can save without having to go the old school route of getting the Sunday circular and cutting out the coupons and organizing them and taking them to the store. So you'll be able to save without even having to print or cut out coupons. Something to keep in mind with the first three, Ibotta, Fetch Rewards, and Checkout 51, is that they're free sites, but they do require you to set up an account. And then once you go shopping, you'll upload your receipt to your account, and that's when you can redeem your discounts and your cash back. So here's a fun fact that I just recently learned, and it makes complete sense. So when you're at the store, remember that eye level equals valuable real estate. And what that means is that the easiest items to see, so the ones that are in the middle of the shelf in eye level, are actually going to be the brand items. And that means they're not going to be the best deal. They're going to probably be the most expensive unless they're on sale that week. So grocery store strategies are that once they get you in the door, they want you to spend as much as possible. And so that's why they actually put the brand items at eye level. So if a good habit to get in is if you're in the store, look high and low on the shelf. And that's where you're going to find your better deals. And that's usually where you're going to find the generic and the store brands, which, to be honest with you, I didn't realize this either, but 9 times out of 10, the store brands and the generic brands are made by the same company that make the brand items. So they're not that different. They've just been packaged or labeled differently. So if you want to realize the best deals, look high and low on the shelf. And last for grocery savings is skip convenience items. What I mean by convenience items is pre-washed fruits or pre-cut fruits and vegetables, pre-washed bags of salad, and snack size items. So what's happening is you're paying for the convenience of them already being washed and cut and smaller packages. If convenience is more important to you, then by all means continue to buy the convenience items. However, if savings is more important to you, then you'll want to consider just buying regular fruits and vegetables, a head of lettuce, and actually, going home and cutting that up and making your salad yourself. And that way you'll realize the best deals. In addition, it's the checkout line items. So when you're standing in line and you're ready, you're waiting patiently to be able to put your groceries on the conveyor belt and check out, you're surrounded by gum, candy, magazines that cost $5 a piece, which I don't know why, and sodas. And oftentimes you'll just stand there, and as you're being patient, you'll just start adding them to your cart. You may not even really need them. It's just something to do. So that will definitely increase your bill. So stay strong. And if you don't need them, just stand there and then check out and go on your way without falling victim to the checkout line items. Okay, tip number 5, shop around for lower car, homeowners, and other insurances. I know with us all being stuck at home right now, we might have extra time on our hands, and so this is a great time to shop your insurances. What I want you to do is you would want to take the deck page for all of your various insurance policies, and you'd want to review them. See what type of coverage you have for each, see what your deductibles are, and make sure you're comfortable with what your current coverage and deductibles are. If you are, that's great. If not, and you think you could lower your coverage, or you think you'd be okay increasing your deductible from $250 to $500, then keep that in mind when you go on to a few of these other steps. So what you will then do is, once you've reviewed your deck pages, you will then call your current insurance carrier, and you will ask them if they have any loyal member customer discounts right now, and see if they do. If they, like I said before, they will never contact you. You'll have to contact them for loyal customer discounts. So if they do have some, that's great, but don't always just jump at that, because it's always a great idea to shop insurance carriers. Make that a habit, like once a year or once every 2 years. And so if you're shopping, when you are shopping, make sure that you keep a couple of items in mind. One is, make sure that the new insurance carrier that you're considering does not have a bait and switch clause. A bait and switch clause is, say, they come back and they tell you, oh, I can save you $600 on your homeowner's insurance, so you'll now only be paying $1,000 a year. You think that's great, you switch over. On the 1-year anniversary of you becoming a customer of theirs, all of a sudden you get a notice that says your homeowner's insurance has now gone up to $1,800 a year. And you're like, whoa, 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 that's not a savings anymore. Why'd that happen? You might call up the insurance carrier and they say, oh, well, we gave you a great deal of only $1,000 a year because that was our one-time new customer first year discount. Well, that's what's considered a bait and switch. So make sure that's not going to happen to you. Another thing to understand is, what is the contract term if you're going to switch? Are they saying you're locked in for 3 years, and if you try to switch your insurance carriers before that there's going to be a penalty to pay? If so, know what the term is, as well as know what the penalty could be if you decide you want to break it and switch. It's always important to know the term and the penalty with regard to the first one, which is the bait and switch, because if you ever find yourself a victim of the bait and switch, I can guarantee that the response we'd all have when we're told that is that, oh, okay, well, I'm going to shop around and I'm going to move my insurance to somebody else then, because I don't like that you gave me that discount just for the first year and didn't tell me about it. So then when you go to do that, they might say to you, that's great, but you're locked in for a 3-year term and you've only been here for 1 year, so you're going to have to pay $700 to be able to switch to a new carrier. So make sure you know both, what the bait and switch clause is, as well as what the term and penalty for switching is. And then last is, always compare apples to apples. And what I mean by that is, have your deck page for all of your policies on hand and be willing to share those with whatever new carrier you're discussing switching to. And why you want to do that is because if you know you're paying $600 a year for your auto insurance, and then you tell them you want them to give you a quote for exactly the same coverage and deductible level you're at now, if they come back, they might still be at $600 and it might not be worth the hassle to switch. Or they might come back at $300 a year and you're like, that's a great deal. But you need to know that you've still got the same coverage and the same deductible. Oftentimes what new carriers will do is they won't tell you, and they'll quote you on lowering your coverage or increasing your deductible. And you don't want to find that out 6 months later when all of a sudden you're in an auto accident and you thought your deductible was $250 and it's now $500. So make sure that you're asking for an apples to apples comparison. So real quick, I actually saw that a couple people joined us after we had started. So I just want to let everyone know that I am Rebecca Worthington, the Vice President of Marketing from Benchmark Federal Credit Union, and we are discussing 10 tips for decreasing your monthly expenses. Tip number 6, so consolidate debt. What I would like for you to do with this one would be review your current debt load. That's always a good thing to know, is what your current debt load is. And when you review your current debt load, see if there's ways to consolidate. One great way to consolidate your debt load is you might have multiple credit cards that all have minimum balances. So each month, because you're having to pay something to 5 different credit cards, all you're able to pay is the minimum balance, and that's not hitting any of the limit that you, or any of the balance that you have out there, and bringing it down. So a great idea to do is, and a lot of times those store cards are at a high interest rate. So consider shopping around. You can look at your local institutions, such as a credit union like Benchmark, and you can actually see if they're offering any type of low interest rate credit card deals. And if so, you could do a balance transfer of your higher interest rate card balances over to that lower interest rate card. And the good thing would be is that you're consolidating multiple card balances onto one card. So now you only have one monthly payment to pay, and you can oftentimes pay more than what the minimum is, so you can start to pay down the balance and actually have your debt paid off faster. When you're going to shop for, a special, a new card, a low interest card to consolidate to, a couple of things to keep in mind and look for are, you definitely want to look for a low fixed rate. What I mean by a fixed rate is some rates are variable, and so they're tied to prime and often can fluctuate as prime does. So you'll want to look at for a fixed rate and know that that's a fixed rate, so that you're not all of a sudden having your rate increase and decrease, every other month. Another thing is no annual card fee. This is a big one. These days, there's a lot of institutions and cards that do not charge an annual card fee. So unless you want something like an Amex that's giving you some type of special benefits for paying that annual card fee, I would say look for a deal in a card that does not charge you an annual card fee. There's no need to pay that. Also, know the grace period on the new card. The grace period is the amount of time you have from when the card is due to when the institution will actually report you as being late with it. And so basically, a lot of institutions have a 15-day grace period. What that means is that if your card's due on the 15th of the month, you have until the 30th of the month to actually pay your card without the institution reporting you to the credit bureau and dinging your credit score. That being said, you will probably still be charged whatever the late payment fee is for the card, but you won't get dinged and you won't be reported to the credit bureau as being late. So know what your grace period is, and then also know what the late fee and the late policy is. So oftentimes, if you're late, you'll be charged a fee. And is it $25? Is it $50? I mean, that's a considerable difference between 25 and 50. So know what the fee is, and also know the late policy. Is some of the larger cards will actually say to you, if you're more than 12 hours late in a month with your card, with your payment, they will actually increase your rate from 10% to say their highest rate, which is 25%. So make sure you understand if your card has a policy like that. One important thing to keep in mind with credit card consolidation is if you pay off higher interest rate cards and consolidate them down to a lower interest card, set those cards aside. Take them out of your wallet that you paid off. I'm not saying you have to close them, because oftentimes if you close a trade line that you've had open for a long time and that you've always been current on, it'll actually ding your credit your credit score in a negative way. So I'm not saying close them, but definitely take them out of your wallet so they're not right there to be used, and set them aside somewhere safe so that you could have access to them for emergency purposes. But if you keep them and you rack the balances back up, you've actually dug yourself into a bigger hole. And now you've doubled your unsecured debt because you transferred all those previous balances to the low rate card, but then you've racked up the high interest rate cards again. So now it's gonna take that much longer for you to get out of your unsecured debt. So make sure you don't rack the cards you've paid off back up. And right now, Benchmark has a great deal on our Triple Play Visa Platinum card. We actually call it the Triple Play because it's a 000 card, which is unusual to find. So if you're thinking that this is a great tip for you and you actually might want to consolidate some debt, credit card debt, give us a call, because right now we're offering a 0% interest rate for 12 months. We're offering 0 balance transfer fee, and we're offering a zero annual card fee. And that brought up a good point that I forgot to mention, which is balance transfer fees. Oftentimes when you're looking for a card to consolidate to, you'll find that the card either has a 0 interest rate for a period of time, but then it has a 2% balance transfer fee, which means whatever the total balance is that you're transferring over to that card, you have to times by 2% and then add that to the balance. So it's a balance transfer fee for the convenience to transfer balances over. Or you'll find cards that offer no balance transfer fee, but maybe a 1.99 interest rate. So it's not a 0% interest rate. So keeping that in mind, look around and shop around right now to look for one that's offering you a 0 interest rate for an intro period, as well as a 0 balance transfer fee. And Benchmark is doing that right now. So give our loan officers a call. Tip number 7, consider refinancing. So again, look at your debt load and then call up your current institution and see what type of options they have available for refinancing your debt load. That's always a great idea, and start there. But then don't just stop there and listen to what they have to say. It's also great to shop around other local institutions. And so when you try to call up and shop around for another local institution, you will actually, oftentimes they'll have new member or new customer deals for refinancing. And what I mean are incentives. And what I mean by that is you'll get a lower rate, you might get a better term, and you might find that they have some type of incentive, such as cash back or a gift card for refinancing your debt over to them. So definitely shop around. But remember, it's not always that you're looking for that short-term, refinance. It could be the benefits of a long-term refinance. And what I mean by that is oftentimes it might not be that when you refinance over to another institution that you're going to necessarily lower your monthly payments. It might be more that you're going to be able to lower your term and your monthly payments will stay the same, but being able to lower your term will actually save you in the long run, because you won't have to pay that. You'll be paying less interest over the life of the loan. An example of that is, say you have a 6-year auto loan and the payment's $350 a month, and it's at 2.5% interest. So you might contact an institution and they say, okay, well, we can refinance for you, but the $350 a month payment's going to stay the same. However, we can cut your term down from 6 years to 4 years. That's saving you 24 months worth of interest. So think about that. That's a considerable savings, and you're going to have your debt paid off even sooner. So oftentimes it's a long-term, look at the long-term benefit, which could be lowering the term and not just the monthly payment. And on that tip of refinancing, please keep in mind that the Benchmark Federal Credit Union loan officers are working right now, and we are available. Give us a call. We will actually review your current debt load with you and actually see if we have any ways that we could save you, whether it's on shortening the term or decreasing the monthly payment. But we will be more than happy to walk through and see if there's a way that we could help you financially by decreasing your refinancing any of your debt load. Because Benchmark's #1 goal is to be here for you and be your financial partner throughout life's benchmarks. Tip number 8, reduce smoking and/or drinking. Both of these habits are very expensive habits. So to realize a savings in your bank account as well as improve your overall health, consider reducing or cutting back. One way that you could actually do this is to set a plan on cutting back right now with the end goal of eventually quitting altogether, because quitting altogether will help you not only realize the savings in your bank account each month from not having to purchase cigarettes or alcohol, but it would also help improve your overall health. And don't get me wrong, I completely understand. This one is a hard one to break. This tip is probably the hardest one that we're going to discuss today, because oftentimes habits are hard to break. So that's why I said consider just reducing or cutting back to realize savings. Tip number 9, download a free workout app. So I know a lot of times we all have, monthly memberships to a gym, like $30 or $20 a month, and we sign up and that gets auto deducted from our account or our card. And so we often forget that we ever signed up and that money's being taken each month. And it's oftentimes hard to find time to go to the gym, especially if you're a mom, to find that time in your busy schedule to go to the gym or to find a sitter so that you can go to the gym. So a more economical option would be doing workouts at home. Not only is it more economical, but it actually is allows you to do the workouts when you can find time in your busy mom schedule, such as before the kids get up in the morning, when you put the kids down at night, or the best option yet is let your kids work on their health and work out and exercise with you. It could be a family affair. I know some of you are probably thinking, oh no, when I work out, that's my time. I want to zen out. I don't want to have to deal with the kids. So maybe you can let them work out sometimes with you, and then other times you could find before they go to, before they wake up in the morning and before they go to bed at night, or after they've gone to bed at night as your workout time. A few free apps that we really like right now, and I have a slide for you on that one, would be Nike Training Club, Adidas Training by Runtastic. And I see that the S might be missing on Adidas. Sorry about that. Training by Runtastic. Daily Yoga Workout and Fitness. Daily Workout Fitness Trainer. 30-Day Squat Challenge. I don't know if any of you have ever done one of the squat challenges, but let me just tell you, they get really hard towards the end, but they really do work. Fit On and All Trails. Hike, bike, and run maps. So consider canceling your gym membership if you can't find the time to get there, or a sitter so that you can get there, and consider doing your workouts at home, maybe even including your children. And tip number 10, cut down on energy use. I know you're probably all shaking your head right now and saying, okay, she's insane. How am I supposed to cut down on energy use when we're all quarantined at home right now? That's going to be impossible. So I know it is hard, and it's going to take a conscious effort to be able to do it, but there are a few tips I can give you on how to do it. One is turn off lights when you leave a room. I know oftentimes we don't do that in my household. So if you can kind of find yourself and your children turning off lights when you leave the room. Turn off the TV when you're not really watching it. If you're sitting there on your cell phone or on your computer, or you're in the other room actually cooking dinner or doing another household chore, but you find that the TV's still on and nobody's seriously sitting down and watching it, turn it off. I know we often leave it on as kind of background noise. We all like to have background noise, but it will cut down on energy if you do turn it off when you're not watching it. Unplug appliances when they're not being used. This would only take 1 second to quickly unplug it. This is items such as your toaster, your coffee maker. So when you're done using it, just quickly unplug it. And then when you want to go use it the next day, it takes 2 seconds to plug it back in. Not only will this cut down on energy use, but it'll also help reduce the risk of house fires, because oftentimes some appliances left plugged in can be the cause of a house fire. So that one's kind of a twofold. And turn off your refrigerator ice maker. I know you're probably like, how am I going to get ice then? Well, we're going to go old school, and you're going to purchase the ice cube refillable trays. And I know you're probably thinking, okay, great. So when I need ice, I'm going to go to the freezer and I'm going to grab the tray, and it's going to be completely empty because my kids didn't refill it. That's probably going to happen. But if you can live with that, it is a great way to cut down on energy. So consider going old school with refillable ice trays. And shorter showers. That's a hard one. I know. I have a 6-year-old who has learned to shower himself. And so he's in the shower for 30 minutes. So it's really hard to cut down on showers, but kind of make it fun for him, or turn it into a game for him. So take a kitchen timer and tell them everybody gets 7 minutes or 10 minutes in the shower. When the timer goes off, your shower's over. We're turning the water off. Or if you want to make it into a game, kind of tell them, hey, I'm going to time you. Let's see how fast you can do this. So from the time you run up the steps, turn on the shower, get in, take your shower, get out, put on your PJs, and you're in bed, I'm going to see if you can do that in 10 minutes. If you can do it in 10 minutes or less, there's like some type of little prize or incentive for them. So definitely turn it into a fun kind of family game. And the last one is wait to do laundry until you have full loads. This will definitely help cut down on energy. I know oftentimes as moms, we find ourselves feeling like we have to throw a load in each night to try to stay up on the laundry, or our children want a certain article of clothing the next day, so we find ourselves doing a small load. But actually kind of set a new plan and tell them, you know what, laundry's being done at one time when I have full loads to do. So say Sundays are going to be your laundry day. And that helps us moms not feel guilty and take a little time to ourselves each evening when we get home, to then not have to feel like we have to walk in the door and do laundry every night. So those were all of the 10 tips to help you decrease your monthly expenses. But I wanted to also tell you that Benchmark wants to give everybody that attends the Single Mothers Conference this year a little bit of a token for our appreciation. And so usually Benchmark is able to do a free credit review with our loan officers at the actual on-site conferences. But since that wasn't going to work on a virtual platform, we did this workshop, but we still want to be able to offer that free credit review to all attendees. So if you're interested in it, call any Benchmark branch at the phone number listed. Monday through Friday, 8:30 to 5 p.m. are our hours right now during the pandemic. And if you call now between the end of the year, December 31st, all you need to do is mention that you are a Single Mothers Conference attendee and would like to receive your free credit review. Our staff will retrieve your personal credit report, and then they'll call and they can schedule a time to go over like a 20-minute credit workshop with you on a one-on-one basis. To keep in mind, you can either do the credit workshop over the phone with them, or you can come into a branch and do it in person once our branches reopen. They will review your personal credit report, and they will offer you tips such as ways to increase your credit score. They will show you things that might be actually dinging your credit score, such as if you have a bunch of unsecured debt out there, so you have a bunch of cards, and say you have a card that has a $5,000 limit on it, and you have that card actually racked up to say $4,900. That will actually ding your credit, because they don't like to see that you've used the majority of your credit line. They like to not see you go kind of more than 50% of your credit line. So those are things that can actually bring your credit down. So we can go over that with you, as well as ways, steps or tips to increase your credit score. And we can also give you some tips on if you find any items on your credit report that you feel are inaccurate and you would like to dispute them, how you could dispute them with the credit bureau to try to increase your score. So it's actually kind of a great review, and the credit report we will be pulling is not the same credit report that you would pull off of freecreditreport.com. It's actually a FICA report and score, so or a credit report that gives you a FICA score, which is the score that lenders will be pulling and using when you apply for credit with them. So it's always a good idea to take someone up when they're saying that they're willing to pull that report for you and actually review it with you. And so this is just my contact information, such as my email. If you have any questions, feel free. It's also our web address. So that being said, if you would like to see all of the 10 tips in its entirety, you can actually log on to our web address at www.benchmarkfcu.org. When you get to the homepage, we have a banner up right now that's hands holding a heart. Click on it and it'll take you to our notices page. And there's where all of our blog articles are being housed right now. And so this 10 tips for decreasing monthly expenses is out there. The grocery savings blog is out there, as well as a few other educational blogs, such as ways not to fall victim to crime, to scams during the coronavirus crisis, as well as why it's important to protect your credit score. So we have a full array of educational blog articles out there that you might find very interesting. I appreciate you joining me on this Saturday to actually hear these tips. And I think now we can go over to the Q&A. Okay, so I think we have some questions here. Let me look at them. So we have a question. What do you think about buying bulk packs of meat, dividing them at home, and freezing some for future meals? That's actually a great way to do to realize savings. Oftentimes, if you will either go to even just the butcher shop and buy a bulk pack of meat, like 5 pounds of meat, or whether you go to the grocery store, you can oftentimes find that you'll get a better deal on that big bulk pack of meat. And then when you get home, just split it up and then freeze it, and then you have it in your refrigerator for when you're doing your meal planning. So no, that is a great tip. Thank you for suggesting that. My car's value is less than my loan balance. Would I still be eligible to refinance? So that's a great question. That a lot of times we will do, institutions will do 100% financing. Sometimes they'll even go up to like 125% financing when it comes to vehicles. So what you would really need to do, I don't have a definitive answer for you, unfortunately, but what you would need to do is you would just need to call up your institution, or even if you want to call up Benchmark's loan officers, feel free. They would love to discuss it with you. And they will actually pull it up, figure out what your car's value is, see what you still owe. And even if you can't refinance the full amount to pay off your loan at the other institution, they might have some other options available for you. So it's always a great idea to talk to either your current institution or shop around other local institutions to see if you're underwater on things such as your home or your vehicle. If there's other, they can sometimes be very creative in ways that they can help you consolidate or refinance. How much is my credit score hurt by one missed or late payment? I don't have the golden number of how much that's hurt, but it will ding your credit score. Every time you are late, you will see dings on your credit score. So it's just always a great idea not to be late. One of the things I can say about that is if you find yourself in a position that you need to be late or you can't make the payment that month, it's always a great idea to actually contact your lender and actually have a discussion with them, explain your situation to them, because they may be able to offer you some type of workout or some type of program available where they can help you. And so don't ever just be late and then like dodge the lenders. Actually contact them, discuss your current situation with them. And if you are late once, it's a slip, you just totally forgot, don't get all worked up. It actually isn't going to ding it and say drop it 50 points, but you don't want to see that on there. What lenders are looking for is we look for your debt to income ratio when we're considering you as a borrower, as well as we want to see, have you been someone who has consistently paid back your debt on time? Do you help with student loans? That's the only thing on my credit report. So we do have an option that could help with student loans. We actually have private student loans that we offer. And what could happen is if you wanted to call us up, we could actually look at maybe you're someone who has multiple student loans that you had to take out, and so you have multiple payments that you have to pay each month. We could look at trying to consolidate those student loans into one student loan at Benchmark, and then that way you're only having to make one student loan payment each month, and you're only being charged interest on one. So that's an option, as well as we do have private student loans. So if you're wanting to maybe refinance your student loans, give us a call. Our loan officers will be more than happy to discuss that with you. Okay. So, what is a good credit score to have when considering buying, becoming a home buyer? So there's no really golden rule. Different lenders will be willing, they have different risk criteria. So they might be willing to take on a little bit more risk than other lenders are. So there's not like a golden rule, but I would say that you definitely kind of want to be maybe more in your like 650 or 680 and higher before you actually want to consider, because applying for a mortgage, that is like the largest piece of debt you'll ever take on. It's usually for 30 years. It usually is about, anywhere from $1,000 to $2,000 a month. So lenders are going to want to make sure that when they're lending for that term, that long of a term and that large of an amount, say like $300,000 or $500,000 for a house, they're going to want you to know that, you know, you're a solid, you're not a credit risk, that you're a solid borrower. So I would say maybe once you've gotten it up to maybe 650 or 680, start to shop around and give institutions a call. But I don't think there's any really golden number. So if you want to give our loan officers a call, you can definitely do so. We actually have a credit specialist. Her name is Stephanie Kornfien. And if you call our office, you can actually ask to talk to Stephanie, and she'll be more than happy to discuss all the options available, to look over your current situation. And if she can't help you right now, get yourself a mortgage with Benchmark, she could give you some tips. I know she's done that for other people. She's been able to give tips on, hey, if you do this, this, and this, then call us back up in 6 months and maybe we'll be able to do it. So it's always worth giving a mortgage lender a call. And consider, if you're not sure, going with a local institution. Okay. I have medical bills that will not go away on my credit along with daycare. Is there any way I could get rid of it magically? Well, I know we'd all like to have a magic wand and say that there's a we could magically get rid of it. I don't think there is a magic way to get rid of it. However, if you'd like to talk to one of our certified credit officers, they would be more than happy to look at it with you and see if there's anything that could be done. I mean, maybe a solution might be a small personal loan that you could take out right now, that you'd be able to pay that off so that it's not dinging your credit, hitting your credit, and then you would only have one payment that you have to make to your local institution. So there are ways to get things off your credit report and pay things off. So just consider giving your current institution a call and discussing it with them, or feel free to give Benchmark's loan officers a call. And I think that's all of them, all of the questions we have. No further questions?
Great. Thank you so much. Just want to let people know that we were streaming on Facebook. Some of the beginning got cut off, so I want to let anyone know that's joining us there that we will have the full archive of this posted as soon as possible. And Bridget?
Thank you so much, Rebecca. If anybody still has questions, we will have a post on our Facebook page for the next 24 hours. So if you didn't get your question answered, you can go ahead and please leave a comment. Once again, thank you to our title sponsor, Benchmark Federal Credit Union, for supporting the Single Mothers Conference. Coming up later today, we have the announcement of the winner of this year's Belinda Harrison Award, a kin-friendly quarantine cooking demo courtesy of our friends at the Chester County Food Bank, and much more. Again, thank you so much for coming.
Thank you.
All right. Thank you.